land on which we are currently sitting, the Gadigal people of the Eora Nation, and pay our respects to their elders, past, present and emerging. Welcome to this webinar today on modern slavery. I am delighted that Kimberly Randle of Fair Supply will be presenting for us today.
Kim is here with me now. Kim's presented a few webinars for GRC Solutions on this important topic, particularly the reporting requirements for reporting entities. And no doubt she'll have another fascinating presentation for us today. Before Kim gets underway, I'd like her to maybe speak a little bit about herself and what she's been doing over the last few years in the modern slavery space.
Great, thanks so much for having me at today's webinar, and welcome everyone. It's been a busy year and continues to be busy as many reporting entities have filed their first modern slavery statements. Congratulations, and a busy month for those reporting entities who are sending their modern slavery statements to their boards. I think Australia is really leading the way in addressing modern slavery. It's been wonderful to see so many entities globally identifying risks within their operations and supply chains and using the information regarding those risks that they have identified to make informed business decisions. We also have been working really hard on our submissions to the Customs Amendment banning goods produced by Uyghur Forced Labour Bill 2020, and excited to be involved in that Senate parliamentary inquiry. I think Australia continues to gain momentum in addressing modern slavery and looking at the financial typologies, another important aspect. I would like to acknowledge also the large number of law enforcement officials who are attending this webinar, and thank them for the incredible work they do in rescuing victims of modern slavery. So thank you to everyone who is attending and being part of the solution of addressing modern slavery.
Thanks for that, Kim. If you have any questions that come up during Kim's presentation, please type them into the Q&A functionality. We'll do our level best to address them at the end. We do have a record number of attendees today, so we'll just have to see how we go. Also at the end, I'll speak to you a little about the training that GRC Solutions offers in the modern slavery space, which is both off-the-shelf and bespoke training. Now over to Kim and her presentation. Thanks, Kim.
Great. So follow the money, find the crime. Many of you who are attending the webinar are from private financial institutions who are very familiar with financial training and detection and risk assessment. This type of financial tracing has previously not been applied so rigorously to modern slavery because there are a number of inherent limitations to financial tracing in modern slavery. The purpose of this webinar is to identify some of the financial indicators of modern slavery, particularly with forced labour. Okay, so we know, and this is quite a widely published statistic, but for those who haven't heard this before, the total illegal profits obtained from the use of forced labour worldwide amount to $150.2 billion per year. More than 1/3 of these profits, so $51.2 billion, are made in forced labour exploitation, including nearly $8 billion generated in domestic work by employers who use threats and coercion to pay no or low wages. Sorry, I'm just moving to the next slide. Okay, oops. Okay, so we have seen financial tracing tools. Oh, sorry. Okay, I'm sorry about this. So it's an increasingly rigid expectation for private financial institutions to be vigilant and proactive in identifying and acting upon those red flags that may indicate that their banking infrastructure and funds transfer facilities are being used for this criminal activity. You're all familiar with AML-CTF Act and that the broad definition of money laundering. What's important to note here that the proceeds of modern slavery actually fall within this legislative definition and are required to be reported. And this is especially critical in circumstances where the Modern Slavery Act requires the board approval and relates to directors' duties. So we're seeing for the first time, because of the Modern Slavery Act, that there is this intersection with the AML-CTF Act and the broad definition of money laundering in circumstances where modern slavery and the legislative definition of modern slavery actually does constitute, the profits from that actually constitutes money laundering. However, the nature of modern slavery and aspects of its economic dimensions means that there is inherent limitations of modern slavery detection and elimination through financial tracing. We have seen over the past little while a huge success in financial tracing tools, especially in relation to OSEC. The detection of OSEC offenders relate to end consumers in the first world, such as Australia, and financial tracing tools have undoubtedly been a major success story in the fight against modern slavery in recent years. Just an example of that is a powerful illustration of the potential effectiveness of such financial tools was outlined in the 2020 TIP report. And we can see from this example that following the publication of the Anti-Money Laundering Council report documenting the link before the small amounts of illicit wire transferred funds and cyber facilitated sex trafficking, law enforcement identified 147 suspects in the Philippines for joint investigation of child sex trafficking and money laundering based on an analysis of suspicious money transfers. And again, a shout out to those private financial institutions who are working so hard to ensure safer communities, and the law enforcement that have been involved in these investigations. So that it's a stringent monitoring and investigation of the transfer of these relatively small amounts of money between unrelated persons to known OSEC hotspots such as the Philippines. It's a relatively simple and effective method of financial tracing relating to this particular type of modern slavery, but it's not a financial typology that is readily transferred to other forms of modern slavery. And this is because, unlike other types of modern slavery, OSEC characteristically involves a direct electronic financial trail between the end user, the offender, and the on-the-ground exploiter of the young person who's directly responsible for carrying out the sexual exploitation. So some recognised general indicators relating to modern slavery, which are non-OSEC related, can lead to the perception that no payment whatsoever is made to the worker. So there's no traceable flow of funds. So a lot of entities, when they're thinking of modern slavery, automatically assume that there's no payment whatsoever made to the worker. But the 21st century reality of modern slavery is often different and more complex. So quite commonly what happens, payments that are ostensibly wages can be strong indicators of modern slavery related activities and other aspects of organised criminal activity, such as money laundering. And we're going to use the rest of this session to go through some of those indicators. Okay, so I'm going to spend quite a lot of time on this slide, which is from Fair Supplies Research. The following is a sampling of money laundering type indicators that relate directly to modern slavery. So I'm going to go through these and give an example of each one of them. And this is just a sample of those financial indicators relating to modern slavery. So what we've seen, and this research has come from cases of modern slavery globally, are that multiple workers are being paid into a single bank account. Cash deposits into an account are often followed rapidly by complete or almost complete withdrawal of funds transferred to an account held by an unrelated person or or entity. And this is what we say that, you know, we think that there is no money flow, but what we're seeing is cash deposits going into the account and almost instantaneously withdrawals or funds transferred to the accounts being withdrawn by other parties. Multiple ATM withdrawals at the same time and location from different customers who have the same registered residential address or some other common identifying feature on their account information. So often what happens in typical situations of forced labour or debt bondage is that victims or survivors of modern slavery actually may be residing in the same place. So that might be on site or some kind of off-site accommodation. And these are just indicators. Obviously, as you guys know, in financial crime, if one of these indicators are present, it doesn't necessarily amount to modern slavery, but these are just some of the things to be looking for. And so what we'll see is that, yeah, there'll be multiple ATM withdrawals, and in the case that this part of that this indicator is elicited from, the actual slave owner would bus on a minibus the group of people who are residing at the same house to the ATM machine in the minibus at the same time, and they would all be required to withdraw amounts of money at the same time and location and actually pay it back to the slave owner. Transactions are commonly being made through new payment technologies, including virtual currency and or email money transfers to and from foreign countries. It is often difficult to detect the legitimate use of these new payment technologies from those that are being used for money laundering and modern slavery, but I can come back to that in a little while. Use of third parties with no apparent relationship to the named account holder to conduct financial transactions, particularly outgoing transactions. And this occurs a lot in modern slavery, when people are in modern slavery, where there might be a bank account in their name, but they have no control over that bank account. I was reading yesterday, which was great to hear, the strengthening of safeguards against abusive messaging. And I know that private financial institutions are doing a lot to address financial control in relation to domestic violence. But from that comes an analogy of the controlling relationship between the account holder and the person who actually has control of that bank account and the unrelated third party. Customer accounts linked to escort service advertisements are another indicator. Again, indicator sometimes of modern slavery, and we are kind of working backwards from that. Deposits into customer accounts being primarily or exclusively coming from third-party cash deposits. Third parties claiming to act on behalf of a named account holder and demonstrating control of the person and their key identifying documents. And so this could include passports, ATM cards, and when interacting with the financial institution and its staff. And again, I could probably do a whole webinar on each of these indicators, but this is just an overview and should be incorporated into that financial crimes training. And so this kind of third party claiming to act on behalf of a named account holder is an indicator to look for primarily when customers are coming into branches. So this type of third party claims are often face-to-face claims, and the first kind of recognition of this indicator is generally through the staff of the financial institution at the branch. Bank account activity showing almost total absence of transactions paying for ordinary living expenses. And this is a big one because there'll be no transaction showing rent, utility, food, petrol, medical expenses, ordinary living expenses, but rather a single periodic withdrawal almost immediately after deposit. And I know when you're kind of looking at those OSEC indicators, the frequency of the withdrawal and the periodic nature of those withdrawals are very important. With forced labour, it's almost immediately after the deposit because of that third-party control over the account. A cluster of the bank accounts registered to the same mobile number, email address, or some stated foreign nationality and account of holder, and income received, deposits made into accounts being immediately withdrawn. So you can see a lot of those indicators have to do with the timing of transactions where there's an immediate deposit and almost immediately subsequent withdrawal. I'm hoping that a lot of the questions, I feel like stopping now, and I guess I don't know if we're getting questions come through, but I'm hoping a lot of the questions come from those indicators, because this is just a high level sampling of the indicators that financial institutions should be factoring into their risk assessments for modern slavery to identify the risks of modern slavery. Okay, so I've broken down those general indicators relating to modern slavery, and because they're not relating necessarily always to if somebody's in forced labour, they're not necessarily relating to the end user. They are more likely to be related to a product or service. So one recognised form of financial deductive methodology for modern slavery risk assessment involves identifying the disparities between what should be the cost of providing a particular product or service with the raw materials and manufacturing and the actual quoted cost of that product or service. And that responsibility is not necessarily the role of private financial institutions, but falls within the realm of procurement vigilance, and equally applicable to financial institutions that are reporting entities. But that is a really, really low-hanging fruit in looking at an indicator relating to modern slavery, where the cost is not in proportion, the cost of providing the particular product or service is not in proportion to the cost of that product and service. And further due diligence and identification of those risks through the procurement process should be undertaken with a high level of vigilance. Okay, so now we're going to talk about the nexus of modern slavery and the indicators with other organised criminal activity. And so there's absolutely been a significant link demonstrated between human trafficking operations and international terrorist organisations. So an example of this would be trafficking flows related to armed conflict, which might include sexual slavery, domestic servitude, forced labour, and forced recruitment and forced marriage. Invariably, the instability created through armed conflict, whether on an intra or interstate level, it leads to heightened sustainability and vulnerability to human rights abuses, including issues related to modern slavery. And we've seen a real increase in that as a result of COVID-19 in terms of trafficking in borders, where vulnerable people, because of the impact of COVID, have had to cross borders to get perhaps home, and the vulnerability and increased risk of there's been an increased risk of modern slavery. So international law enforcement efforts in relation to terrorist activities have always focused really strongly on a wide range of financial typologies. An example of this is the tracing of payments to and from terrorist organisations before and after a planned terrorist single events, and the traceable financial flows. So in the same manner as terrorist acts, there are still critical events in certain areas of modern slavery, such as the purchase or offloading of people held in modern slavery, in connection with their forced translocation across international borders. And those of you who specialise in this area of tracing should really be looking at those critical events in connection with the translocation across international borders, because the link with trafficking flows and those other criminal activities are closely related. So elimination-based financial tracing, there also appears to be significant potential in the development and refinement of elimination-based approaches to financial typologies as part of modern slavery risk assessment. And so current best practices for processes such as desktop auditing of suppliers, including substantial components of where a particular supplier's risk profile is deemed lower through the presence of certain measures, for example, published plain language human rights and whistleblower policies, auditing procedures relating to worker conditions, a tool that you can use to eliminate to undertake elimination-based financial tracing. This is a really, really interesting example of a protective measure that I found in Saudi Arabia. So I'm just going to show that example of how financial institutions can also use protective measures in circumstances in relation to modern slavery. So during the reporting period, the government actually in Saudi Arabia actually expanded its usage of wage protection system, and it actually required employers to pay foreign workers by electronic transfer via a Saudi bank, permitting the government to track disbursements and prevent non or delayed payment of wages. And this is a key forced labour indicator prominent across the kingdom. So this requirement also applied to all employees who worked for companies with 11 or more employees and covered the vast majority of expatriate workers in Saudi Arabia. It also mandated individual employers of domestic labour to issue prepaid payroll or salary cards as soon as the domestic worker arrived in the kingdom, and that ensured a legal working relationship between the employer and employee and safeguarded the employee's prescribed wages. The system then currently voluntarily reviewed payrolls and imposed penalties for any firm that failed to maintain at least 80% compliance, resulting in the suspension of government services and recruitment privileges. So that was a surprising but interesting example of regulated financial tracing to prevent modern slavery. Financial evidence, and I'm a little bit nervous because I know there's so many law enforcement officials listening, but financial evidence in the individual prosecutions for modern slavery is really, really strong evidence that needs to be more thoroughly analysed and examined by financial institutions when they are developing a methodology for these types of indicators. So the crucial nature of financial evidence to secure convictions in prosecutions for human trafficking and modern slavery, it cannot be overlooked by those looking to develop this typology. So in addition to the role that this plays in OSAC prosecutions, it can also be of central importance in criminal prosecutions relating to forced labour. So in a series of successful criminal prosecutions in the United Kingdom demonstrated the counterintuitive nature of the financial indicators of modern slavery activities. And so again, it goes back to those indicators that I discussed before, because in these cases, there was a presence of a significant number of bank cards and the like for accessing bank accounts held in the victim's name, which were actually indicative that those individuals were held in forced labour conditions.
Finally, I just wanted to let people know that we'll be holding a webinar next month on diversity in the Australian workplace. It's going to feature Professor Catherine Lummy of Macquarie University and my colleague, GRC Solutions, Adrian Poon, who was formerly co-chair of the Sydney Gay and Lesbian Mardi Gras. It's a very relevant topic for those working in the financial services business, and obviously very topical at the moment in light of what's been happening at Collingwood Football Club. Anyhow, details about that webinar will soon be put on our website, and encourage those of you who would like to please join us for that event. Thanks once again for joining us today. And as I previously advised, some materials will be sent to you after this presentation, which we hope you find really helpful. Thanks once again to Kimberly for her wonderful presentation. Thank you. Bye.